Okay, this video is probably going to be 2 or 3 videos long, and it's going to be an overview of the COT spreadsheet and the journal that I also use. So it's going to be a few videos all in all. This is the COT data spreadsheet, and you'll notice straight away at the very bottom here that there's quite a few different tabs. And what I've done, I've added the trade log, the journal, together with the COT, so it just sits in one convenient spreadsheet. I did it that way rather than having multiple spreadsheets. And there's an awful lot to explain from this. But for this particular video, I'm just going to touch upon the COT data, and looking at the COT raw data tab, which is this one here, you'll notice that this one is green, and green means a manual input. Moving to the right, currency scores, that's in red. That's not manual. This is all formula and data driven, as is pair constructor. So there's nothing I need to add for these two. And indeed, there's only 2 manual inputs. Actually, there's only 1 manual input. I'm going to change this one to red. I'm not sure why that's green. It shouldn't be green. And I'm going to just manage the protection on this as well if I can. There you go. And the same for this one, just in case I make an error. There you go. So these are safely locked away now. So COT data, there's only 1 tab that we really need to input, and that's this one here that we're looking at, the COT raw data. Everything else to the left, let's not worry about that just for now, with the exception of the FX COT master, which we may look at. So this is my landing page, and the first thing that I do every weekend, typically on a Sunday, is that I navigate here. So updated each Sunday for upcoming trading week. And that is the COT reports weekly. And you can see here there's a hyperlink attached to that particular cell. I've already gone ahead and opened that in the tab above. And we're looking for the current legacy reports. So this is what we do. And let's zoom in here. There's a lot of information's here, but we've got the landing page, which is the CFT, C, the Commodity Futures Trading Commission, and we're only interested in this one here, the Chicago Mercantile Exchange, and we're looking for the short format. So you can see here it sits nicely under the futures only. And if you go ahead and click that, this page will pop up. And you've got lots of different commodities here. You've got crude palm oil, butter, milk, non-fat dry milk, all kinds of stuff. But the first thing you want to do is check at the very bottom is when this was last updated. So as I record this on the 13th of July, this was updated on the 10th of July. Now remember, this is lagging. This is a snapshot of what happened the previous Tuesday. So this is, I believe, 3 days later that it's available to us, the general public, that is. And if we take a look at one particular pair, I'll do a separate video on how we compile all this information here. But if we take a look at the pound, yep, just checking off here. So we've got the pound here, we've got the code at the top here, the Chicago Mercantile Exchange, futures only positions, and you can see it as of the 7th of July. And you notice this is published on the 10th. So yep, it's about 3 days later. The idea is that we take a couple of numbers here. The first one being the open interest. We record that once a week. And we also want to pay attention to the non-commercials, in particular, the longs versus the short. And then we get a net number. But I'm not going to go into too much detail about this. I'll do a separate video probably on a Sunday when I will populate the COT spreadsheet with the latest weekly figures. Okay, so that's basically where we start. We start here. So the next video, what I'll probably do then is I would want to update the net COT current numbers for all of these currencies. Note that we don't have a US dollar for that, but we do for every other currency. So what we'll do is that we would copy and paste this and move that into 2 weeks ago. This is for the next update, that is. And then we'll take our current COT, and then by that time it will be a week old, and then we'll move that into the previous week. So that will go here. And then that would leave a blank column here for the latest numbers to print. Okay. All right. So this is it. So once you put that information in here, note that we have yellow for the manual entries, green and gray, we don't need to worry about. But yellow, these are those manual inputs. Okay, and then we do the same here for open interest as well. So if we want to do next week's as the current week, we would need to take this and move it over here, and then we'd lift this from here over to 2 weeks. So we're always tracking 3 weeks worth of data. But it's not only 3 weeks worth of data that this spreadsheet is designed to look at, because what we've got in the FX COT master here, we've got 3 years worth of this data. And this is very important for one reason, and that is where we can find the percentile, where that currency is currently sitting in a 3-year extreme range. Is it in the upper percentile, the medium percentile, or the lower percentile? And this is important because if, let's just say, the net COT current number is minus, that may look like shorting, and indeed it probably is, but we need to frame that in a bigger picture. We can't just look at the last 2 weeks. So overall, we've got 3 weeks worth of data. We need to say, okay, well, how short is it really in retrospect to 3-year range? And that will give you the percentile, which we'll go into in more detail. So in column E, we get the weekly change as a result of this data here. We get the percent of open interest, and you can read the descriptions here. I'm not going to read every single one, but you can pause the video and take a look yourself. We get the open interest share as a percent. This is what I just showed you in the FX COT master, the 3-year minimum and 3-year maximum. And this is the point that I was trying to make, the percentile. So yes, we have just gone short on the euro, but it's sitting at 23.19% percentile, which is medium. So it's not an extreme. The open interest week on week is also recorded. And that indicates, as you can see here, participation entering or exiting. So there are more people gradually entering. Position regime ultimately is short. Position conviction ratio, and that answers whether speculative positioning is accelerating or stalling relative to the recent weeks. That then converts into a currency code, And we've already looked at the open interest, which is recorded, again, a separate video. And then just to the right here, we've got some more information here, which feeds further downstream. So this is the main heartbeat, the engine of the COT report. And again, it's fairly simple. Like I said, all we need to do is take that data from the weekly CFTC website and we update it here. Then we get to the next tab, the currency scores. Okay, so we've got position score, momentum score, extreme score. That then gives us a total score, which then produces a state of positioning change and a position behavioring score. So position score here is how stretched, maybe I'll zoom in a bit, how stretched the net position is within its own 3-year range. So here we have a -1 for euro, a -2 for pound. Momentum score, this one here, direction and force of this week's positioning change. That is it actually moving now? So +2s is fresh buying, -2s is strong, fresh selling. 0 is flat or insignificant. So flat for euro, we get a +1, a 0, and a -1. Extreme score flags how close positioning sits to a historical regime. If it's +2, we're in the 80th percentile. Again, this is looking at the 3-year data range. +1, the 60th percentile. This then gives us a total score, positioning plus momentum plus extreme plus behavior combined, plus the COT's overall strength. Positive numbers is a bullish lean, negative is a bearish lean. So this is actually doing quite a lot of information. It's taking in consideration not only the 3 weeks worth of data, not only how it's looking at all of this information, but also considering the 3-year minimum and maximum as well. So this is a pretty solid number. And you'll notice straight away that the US dollar is strong, which is giving off a bullish build. Euro -4, which is a bearish build. And then we get all the way down here maybe to the Canadian dollar, -8, which is the bearish build. And the positioning behavior is a -3, which turns the state into a number that rewards fresh trend building and likely discounts unwinding. Okay, so that's the currency score. Again, we don't need to touch this. This is all just formula driven. Then we get to the pair constructor. I'm not going to spend too much time on this because the weekly FX signals dashboard kind of paints a nicer picture of all of this. But all we do, we enter our FX pair. So the base currency goes first in column B, followed by the quote currency in column C. So pound, US dollar here. The pair score is -10. So it says here if it's a negative number, the quote is stronger. So the quote being the US dollar. And as you saw before, the US dollar is sitting at a bullish build +4 at the moment. So that gives us a score strength of 10. The bias here is a strong sell because why? The US dollar is stronger than the base currency, which is the pound. There's no divergence here. Participation, flow quality across both legs. Mix, we have one of each. This then generates into a trade rank. Number 1 is the strongest signal and 20 is the weakest signal. Maybe I should update that here. Oh, it's protected, but hold on a minute. Uh, 20 equals the weakest signal. Okay. So that's sitting at the moment as a trade rank of 5, which is pretty high. Then we get a pair positioning score, the flow and open interest differential. This is real money actually behind it. And it gates the bias and feeds gate 2, which you'll see shortly in the weekly FX signals. And it then prints an overall trade quality score. Okay. And again, I'm not going to go into many more details here because I believe this ultimately does a better job. So sticking with our pound US dollar, which is up here, we get a gate 1 status, which is a pass. The directional bias, oh, we're missing one column there we go. So the pair score is a -10. So we know that the pound is weaker generally to the US dollar. We've already seen that. That's a -10. Gate 1 status is a pass. Directional bias is a strong sell. There's no divergence. Gate 2 is a pass. And then because we get gate 1 and gate 2 open, that allows us to trade this pair. Conviction score is 12. And the higher the conviction number, the better. And the lower the trade rank, the better. So trade rank, if it's first, that's going to be a prime setup. But if it sits anywhere between 1 and 6, I think, as a trade rank, that's generally good. And if it sits between a 15 and a 20 for conviction score, that is excellent. So this is a trade status as a watch list. This is something that we can add, but we do have a crowded flag, which is chasing. The positioning read, it says here that the pound is extreme short, currently in a bearish unwind. There's high crowds, so people have been shorting the pound for quite a while now, and the US dollar is bullish. The squeeze is confirmed, the pound is covering, and the open interest is gradually falling. And here I've got a legend. You can see chasing, mixed, crowd, and blank. And for the fuel check, which is in column M, nicely color coded, the squeeze here is confirmed that the crowded leg is now unwinding. The shorts are covering, which is actually showing general strength now in the direction of the pound at the moment. Trade is the right way, but it's fighting a live reversal, which is why we don't get a high conviction score, because now what I'll do is I'll jump over to the pound US dollar and I'll just show you what this actually means. Yeah, there we go. So if I put this onto the daily chart, and we'll just ignore this at the moment. There we go. Make that a little bit bigger. All right, so it has been signaling a strong sell because we know that the quote currency, the US dollar, is stronger than the pound. But if you notice, interestingly, what's happened is that it's tapped into this fair value gap, which is just resting here. And the base, the pound, the shorts have been covered. Therefore, buying has been happening on the pound currency. And that's brought it all the way back up here into this fair value gap and blown past that fair value gap. And now this is where we are sitting at the moment. So the shorts had been squeezed out. Short-term buying has stepped in. So this is where I'm potentially looking now for a reversal point for the pound US dollar to take out this swing low point right here. Okay. Here we go. So that's pound US dollar. So once again, let's just go through this so it makes sense. It's giving us a strong sell. The direction is there, but it doesn't give you the actual path that it's going to take. Invariably, it doesn't just move in one straight line. it does move up and down. So we've got a strong sell bias, not the path. Unfortunately, that's something that needs to be read from the charts directly. We've got a relatively medium conviction score and a decent trade rank. It says here that we have been chasing, and we need to add this to the watch list. So once again, let's read this again. Extreme short, but there's a bearish unwind. There's a high crowd. The US dollar is in a bullish build. The squeeze is confirmed. The pound has been covering an open interest falling. So this is exactly what we've been seeing here. The open interest has been falling, and that has been given strength to the pound. Now, what happens from here? Obviously, we'll see. But if you take a look at the daily MACD, it's slowly running out of momentum on the stochastic, and the MACD is slowly starting to cross. We won't get a confirmation until another day or two yet. But on the 4-hour chart, we've actually been making higher highs, and this at this point you would suspect would either reverse from here and continue going up, therefore blowing through my stop loss, or what I'll be looking at is a break of structure to the downside here. I'll just add an alert here just to let me know that has or has not happened, whatever the case may be. And then breaking through here, a retracement, and then a continuation down to take out this here. This is the trade that I'm in at the moment, but we'll see what happens. Right now, the H4 MACD, it is supporting a little bit of weakness, short-term weakness, but again, we don't know. So we'll just have to sit back and wait. All right, so that's it really. So in a summary, this is over 20 minutes long, but I think it's covered some good detail here. We started here with the COT raw data. Remember, every week we want to begin here. I'll do another video on how to populate this properly. Then obviously we need to update manually the yellow columns, which are here and here, P, Q, and R. The gray, we just completely leave that alone because it's data driven. Further downstream, that feeds into the currency scores, which alternatively feeds into the bear constructor, and then finally hits the weekly FX signals, which is what we can see here. All right, well, I think I'll leave that there for now. Otherwise, this video becomes excessively long. But remember, this is a directional bias tool. It's not a path tool. It's not an entry signal. It's something that you will consider. Apply that then to the chart, just like I showed you with pound US dollar. And despite the weakness of the pound, which is -4, and the strength of the US dollar, it's a perfect example of it doesn't always work in that immediate favor. Yes, we had a little weakness here, but then the shorts were covered, short-term buying, and now we'll just have to wait and see whether or not that direction continues from this particular price point. It may not. I guess we'll find out next week with the update. All right, that's it. Hope that helped.